Here at Rate Planning Group, our theme for the month of May is about personal insurance. So today we're going to be talking about the basics of disability and life insurance. Disability insurance is very crucial and everyone should make sure they have sufficient coverage. The most common type of disability insurance is short-term disability. This is also a very common employee benefit, but if your employer doesn't offer it, you can purchase it through an outside independent insurance agent. Short-term disability generally pays a percentage of your income for a benefit period of 3 to 6 months. There is also a common elimination period during which time you don't receive any benefit. And this elimination period can range anywhere from 1 to 14 days. So that's why it's really important that you have an emergency fund just in case you have a period of time that you don't have coverage. Followed by short-term disability is long-term disability. And again, this is a very common employee benefit, and if you don't have it available to you, you can purchase it through an outside insurance agent. Long-term disability has a longer term of having a benefit, and it's usually for a period of 3 to 10 years. There's also an elimination period with long-term disability, but if you have a short-term policy, then it's likely that the short-term policy will actually cover you for the elimination period for the long-term disability. So the two of them work hand in hand together. If you are going to receive long-term disability, you should know that oftentimes the requirements are actually stricter to receive long-term disability because of the extended period of time. And then the final form of disability insurance is Social Security disability insurance, which is a federal disability coverage. In order to be eligible for Social Security disability insurance, which is commonly known as SSDI, you have to meet certain criteria. One of the criteria is that you have to have put in enough credit. So you have to make sure you have enough work credit. And also, your condition has to be expected to last more than 1 year or result in death. And then we have life insurance, and there's so many different types of life insurance available, but the most common types are group life, term insurance, and whole life. Group life insurance usually has a basic and a supplemental form. Under the basic, it's an employer-sponsored benefit, and it's commonly for $50,000 or 2 times your salary, but this can vary based on your company. If you have supplemental insurance available to you, this is still a group life policy, but you usually have to pay for it through like employer withholdings. Supplemental coverage can increase the amount of coverage that you have available to you, and it gives it to you at a group rate, so it can be lower than if you go out and purchase your own separate policy. And then we have term insurance, and term insurance covers you for a specific amount, like a specific dollar amount for a specific period of time. And there's so many different terms of coverage available, but the most common are 10 years, 20 years, and 30 years. And because of the various terms, this can be a very affordable type of insurance. And it's for a very specific period of time and a very specific amount of coverage. So for instance, if you have a $1 million 30-year term policy, you have $1 million of insurance coverage for exactly 30 years. And that's assuming that you pay your premiums. And at that 30-year mark, you no longer have coverage, and you also have no accumulation of value. Whereas with the whole life insurance policy, there's 2 components, and there's a death benefit and a savings component. On the savings component, you can actually invest the savings, and you can use that savings to withdraw as cash, or you can borrow from it, or you can pay premiums, or you can build up the amount of insurance that you have available to you through combining the death benefit and the savings component. Because of the savings component, whole life insurance does have a higher monthly premium, so you really want to make sure that you know which type of insurance is best for you.